We got ourselves a good old-fashioned lockout rally. This is a market that continues to push higher here and frustrate the majority. It feels like trader frustration is higher today at all-time high prices than it was at the lows a month ago in the midst of a war as the market was breaking down. I think traders are more frustrated right now. So I want to break down why that is the case and why there's actually still so much opportunity in this market. Believe it or not, there are a very concentrated group of the market that is pulling everything else up, but there's a lot left behind. So we're going to talk about all of it. Let's get into it here. I want to rewind the tape just 1 month ago. This was the picture. This is the S&P 500 just a month ago. And this is where we were sliding down into the abyss. We were in the midst of a war that probably didn't go as originally planned or not as easy as originally planned. We had credit issues, lockup redemptions that were trying to happen. We had a Fed that was, conceivably going to have higher rates for longer, or potentially no rate cuts this year. And this is what the S&P 500 price action looked like. It was rolling over from this multi-month textbook top. And so that was where everyone got comfortable, and it was a slow move down. So everyone could sort of get on board here with the bearish narrative to understand that this market was acting terrible. And so there's plenty of sort of psychological, preparation for lower prices. And we had a springboard rally. So this is just like a week or so later where we popped up. We finally, reclaimed a little bit of a trend line, just sort of worked off oversold conditions. But it was this gap up here, which is now looking more like a breakaway gap that really flipped the tone of this market. It forced a squeeze, a structural squeeze where there was so much hedging done. There was so much kind of comfortable shorts that were layering into this market. And this is what really flipped the tone here in the market, where still difficult to adapt to and to want to believe, was because this is at the same exact day that we were looking at this gap up here. This is what software stocks looked like on that same day. And I'm using software just as a proxy for lots of other names. It didn't have to be software. And it still is, there's a tremendous amount of dispersion in this market. Not all stocks are getting treated equal. And I think that, really sort of feeds into this other piece of frustration that traders are feeling right now, is because not everything is being carried higher right now. And so this was tricky because if you were weighed down in software or these adjacent names that didn't get the post-it note that it was time to reverse course and rally, then you're in a tough spot. Semiconductors led the charge. We talked about it. They were the first to hit all-time highs before the indexes, before pretty much any other segment of the market. It was semiconductors, and they continue to go vertical right now. Now, again, to beat the drum here, which I've brought up multiple times, this is our process. This is a rules-based process. And the reason I show this is because I think it is so timely for process and education to sort of figure out how you can kind of rules-based switch gears. This is why, again, I'll say it again, I am a systematic rules-based trader, is because this flippening here of market regime is too fast for me personally to look at and get that on board with the bull train suddenly. So this structure here, this is our market environment indicator specifically built for swing trading. I'm going to be showing this every single week so we can always take a pulse of kind of where we are, where our rules-based process is seeing the market environment. But we had the early switch gears on April 7th. We had the more kind of confirming April 9th switch gears is when it got really excited on the upside. Now, even our long-term trading system, so that's early kind of swing trading. This was taking notice pretty quick. Our Galahad trading system, right? This is our longer-term system. is started to buy back into the Qs like right in here in the 620s or so. So this is a longer term, hey, I need more evidence, I need more proof before I can believe this rally. That's when it got involved in the market. And so the reason I show this again is to show the multiple layers of trying to like get back on board and not just be completely out, flatline, stubborn, fighting the market. All right, let's talk about the semi some more. This is remarkable. This is actually going to be, I'm showing this early, so this is a bit of a chart crime, but if this holds next week, this will be the largest gain ever, the single month rally for the SMH ETF going all the way back to 2000. So in its entire lifetime history, I know the SOX is actually a longer history, so could technically go back more, but 32%, that is the rally for this month on the SMH. Intel this week, Friday, earnings report soared, stock is ripping, it doubled in like a month's, 2 months time. Apparently now we all need CPUs. GPUs aren't a problem, it's the CPUs. Semiconductors are so hot, they're durable right now, and it feels, well, it is the fact that investors feel confident kind of corralling into these semiconductors that are very resilient in this AI new economy, and we know there is just a tremendous amount of demand here, and it feels like the most durable kind of safe thing to go and rotate capital. Now, what's interesting about semiconductors, I am not a big seasonality person, but I was just doing some digging on semis, and this is April right here, and the top month is 2026. But if you look at April, it's actually a pretty terrible month seasonally for semiconductors going all the way back 10 years. Mostly red. This is not the case with like Qs or SPY or other risk assets. It's somehow really kind of layered into semis. And then you just have this huge outlier year that's being printed right now for 2026 at a plus 26% return. So it's kind of interesting. I don't know. I'll throw that out there as trivia. I don't know that too many people are talking about it. This is the 10-day rolling returns for semiconductors. And we just went off the charts here at its highest sort of stampede, all, you know, bodies into the boat type of thing, and really making records. Now, I got to take one victory lap for our Quant Rocket signal. This was SOXL, so it trades a few 3X ETFs. Buying it on this gap up, it's just incredibly difficult in the moment. This is something where you look back on a chart and you say, oh yeah, obviously you just buy this breakout. But again, all of the sort of emotional baggage of news flow and all those other things that we talked about that traders were dealing with a month ago made this trade, this buy, this purchase right here extremely difficult, because everyone, you know, would probably look at this at that time and say, oh yeah, you're about to buy the top, this is going to gap fill and then just roll right back over into a downtrend. It didn't happen. In fact, 2.5 weeks later, it's up 100% in a straight line. So just a remarkable sort of signal there. And again, rules base for the win. Market performance this week, oil up huge. So big rebound this week in oil. 14% makes the Qs move look small at 2%, gold down 3 on the losing side. Here's S&P 500, basically a little chop, 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 but up and to the right to new highs. VIX was chop, chop, chop and down, still holding around 18 though, so it's not giving up too much right here. It is staying a little bit sticky in this high teens, almost 20 area. Dollar index was on bounce mode this week. It's still, you know, seemingly like it's in rollover territory here, but it did catch a little bit of a bid. And 10-year treasury was, you know, kind of flat, chopping it out, but similar to the dollar, it did kind of rebound a little bit and start to carve out a range around this 4.3 area. So sectors this week, tech was the big standout, and energy. Energy was a trade I was talking about quite a lot on social, just, you know, hey, this is a pretty interesting spot to buy the dip for XLE for lots of reasons. And that proved to be a good trade there. Healthcare, communication services down the hardest this week. Our smart trend filter, so this is the way we measure sectors here. Most things are bullish right now. That makes sense. Even utilities technically still bullish in our book. It's really just healthcare and energy that are kind of standing alone to the downside and not acting well. 52-week highs. So again, this is another sort of chart that's getting passed around everywhere, which is basically saying you can't believe this rally. This rally's fake because there's not enough 52-week highs. I mean, the rally looks pretty real to me. I mean, prices continue to move up. So again, I love 52-week highs. It is one of my favorite measures of breadth. I do like to see this supporting, and hopefully it will soon, like we talked about. But for now, it's still a very unimpressive number because we are back to this old game of very large cap, mega cap companies that are getting bigger. The average stock is still not really breaking out to these new highs, hasn't fully recovered. Despite that, though, S&P 500 stocks above a 20 SMA is overbought. Is in towards overbought territory. So again, this large cap, still a decent amount of stocks participating in the S&P 500, not in the smaller stuff. Put to call ratio, nobody really needs to hedge anymore, so we're down to the lower bounds. Again, like I mentioned last week, as one of the techniques here, if you're afraid of this market rally, volatility, put protection, insurance is a lot cheaper now than it was a month ago. So you can kind of have your cake and eat it too if you need to get involved in the market, but also want some of that overnight protection. Next week's a big one. So we've got Mag 7 reporting earnings. We've got Alphabet out on Wednesday. We've got Apple on Thursday. We've got Meta and Alphabet as well. Did I say that already? Amazon. So we've got basically the heavyweights coming in next week. Rivian, Visa, plenty of names. So we are going to have lots of data to digest and chew on next week. And I would expect the market to maybe hopefully take a breather, until we get through some of these earnings and see where we're kind of standing. We've got a little bit of econ data as well coming out that might be influential, the core PCE that the Fed likes to look at, and some ISM manufacturing. Now, next up, we're going to look at some of the areas of the market I am still finding opportunity and that I'm actually very excited about. Our sponsor here, IBD, makes this show possible. 2 discount links in the description of this show. Once you get done watching, check out those discount offers. Market Surge, IBD Digital. Tell them Evan sent you. Let's take a look at some charts. All right, let's quickly review the price action here in the major indices, and then I want to show you some pockets of the market that are not nosebleed extended like semiconductors are. Like, there's still lots of rotation potential opportunities here. So here's the S&P 500, 4 weeks up in a row in a straight line. Notice, though, this week we did get a smaller range on this week's trading, which I know doesn't sound like much, but it does equate to a little bit of digestion here in the market, in the S&P 500, this broad basket now. So Friday we started to lift out. We made new closing highs, but we effectively went nowhere for the entire week until the rally on Friday. I still think, relevant levels here, just from a pure price action perspective, are these highs. These are the highs I would be paying very close attention to here, coming in right around 6,900 or so. If we are above that area, then life is good. The uptrend is intact. If we start to cascade below that, all of my excitement about this market starts to quickly change. So those are still the risk management principles I'm using on the backdrop. The Qs here had more acceleration. So 4 weeks up in a row now for the Qs. I still think the 630 zone is the important line in the sand here that we want to pay attention to for the NASDAQ. But you can see that this was more of a brief kind of 2-day consolidation, Tuesday, Wednesday coming into this week, or really Monday, Tuesday coming into this week. Then Wednesday we started to lift. Thursday we had a little bit of, movement. And then off to the races on Friday, Intel earnings, semiconductor leadership, and so on. So the Qs here, again, lockout rally, not letting people in easily. It's a squeeze. It's a chase. The entries at this point, are by design going to feel uncomfortable, I would say, just given how much the Qs have moved in such a straight line. Russell 2000, again, 4 weeks up in a row, a little more hesitation here. and consolidation and some chop. So this is breathing a little bit more here. This is more representative of that average stock where not everything is getting treated with such excitement. And so that's kind of the lay of the land there for the major markets. I think where you can still find opportunity, I would say, is biotech, I think, is an interesting spot. Here's XBI. This broke out of a multi-month, 4-month range just a couple of weeks ago. It just printed an inside week here. This is not super frothy. There's no big chase here. Biotech is effectively where it was 4 months ago, a couple of percent higher. And it's got this beautiful uptrend that's still intact. And it has beta behind it. So this is an area of the market right now that isn't quite so hot, attractive for capital. This is where a spot, in my opinion, where you could see rotation if this rally is to broaden out. If this rally, this market environment, that 52-week highs list, if it's going to expand and start to be supportive across other sectors, I would start watching and keeping an eye on things like this. For you folks that have more risk appetite, you could look at space, UFO ETF. There's lots of individual companies in here. SpaceX, we know, is coming public in the next month or two, and we cooled off a little bit here. So 4 days pulling back. Take a look at the range here that it just broke out of, and it's kind of checking back to this range right now. There are so many charts that look like this that are technically healthy, that are in uptrends. And so that's what I'm saying is you can still find plenty of opportunity here as a technical trader, despite the fact that indexes and semis are relentless to the upside. Bitcoin is another spot that I think is very interesting right now. I did a video last week on Bitcoin on the trade setup, 3-4 minute video. It's on the YouTube channel. You can check that out. It really didn't perform this week. So this was, again, one of the sort of ignored areas of the market. It was up just marginally, but basically a break-even sort of digestion week for Bitcoin. I think this, what I said, 75 to 77K area for Bitcoin is going to be the spot that we need to break above. We need to clear through. You can see, I was saying more 75 to 77 in the prior video. It's definitely more the 77 area here that is just giving us some hesitation. It is where we sort of paused and took a beat, and this little mini sort of rally bounce that got sold aggressively in February or January. So we're right here. I still believe that if we can push over this zone and sort of get free, it's a fast move to the 90s. I think there's not much that's going to stop us in between. Obviously, I could be wrong here, but I do have sort of a heavier size position in Bitcoin now. All of the models sort of stacking up with signals throughout the week. So we are long and looking for higher prices here as well. Let's take a look here at our work that we're doing. And this is our market environment dashboard. And so we're in the excellent swing environment for 12 days. We're bullish across the board here. So that doesn't mean that there's not going to be pullbacks, right? And resets here. But the framing in our model is that we are using pullbacks as opportunities to increase exposure, to get involved in this market. That's the way we're framing this, where I think others are still kind of thinking about an old regime here. If we look at industries on the left-hand side, so you can see what's been dominating. To be honest, I don't know what this broadline retail is. I have to look into what stocks. That could be a niche group. But semiconductors, electrical equipment, electrical components, all of this is just dominating the list here. So we've got 14 stocks in the semiconductor and equipment name. I'll click on them. I'll show you through. They're mostly going to be extended, and then I'll show you an opportunity on a new signal for Monday. Many of these names, again, triggered weeks ago. I mean, Credo, for instance, we've hit all 5 targets. This was an entry down here this was just 2 weeks ago. It feels like an eternity ago on this chart, but this looked like death here. Look at this chart that it was in, and suddenly it ripped to highs here. A-Lab extending, almost hitting a next target here. in AMKR. Why is that name escaping? Yeah, Amcor. RMBS, all just going vertical here. These were all entries kind of coming out of the last month or so for semiconductors. Not too many were, a few were chases, but still, this is just the hot area of the market where momentum naturally brought us to this space as semiconductors kind of led out of it. RGTI, this Rigetti is lumped into the semiconductor space, but this you can see rolling over, might not actually get any legs to it, getting close to our exit here on Monday. And that's kind of the lay of the land there on just some of the hottest stocks that have clearly run. So they're not necessarily good spots. But let me show you for Monday. This is our trade plan for Monday. So this is what things look like here when we get a new signal. So NXT, we don't own it yet. We're buying it Monday. That's the way this is going to, kind of set up for us. So here's the trade plan on the right. We've got our trade checklist that we go through on each individual stock. So we know we're in an excellent swing environment. Earnings are 18 days away, so we've got enough runway here. This is an industry rank of 3, so we've got a nice check mark here. And based on our model, where we go back 10 plus years and just do historic simulations on this specific ticker, it is an outperformer on our Rockets model. So the trade setup is on Monday. Open is going to be the purchase price. 109.34 is the initial, we don't really call it stop losses, exit zone. And first target is up here at 145. This, again, is a great sort of look at something that's not extended. Let me pull this chart up just so you get more history of NXT. This is what this looks like. So big uptrend. This is a solar play. Sideways for 3 months, and it hasn't broken out yet. So this is kind of an early breakout. This technically didn't break out, but we're getting in. Our model likes it, and that's what we're looking for. So that's a good example of the types of stocks we're trading. We're still finding that aren't chases and can still manage risk sort of responsibly. So that's what I got for today. It's a tricky market out there, but I encourage you to, go through the charts, look at some of the areas where we could get rotation. If we start to accelerate, or if we're still accelerating next week in semiconductors, then we can probably start to look at some blow off top talk on semiconductors and the exuberance there. I think we're maybe close to at least some digestion. I don't know that it's a blow off top yet, but clearly the best month up in a row in history for semiconductors. There's some rich valuations there. It's pricing in a lot of good fortune, let's say, on earning streams for the years ahead. So that's what I got. We got links in the description of the show. Thanks so much for tuning in. We'll see you back here. Maybe intra-week as well. I'm starting to try and carve out more time to do those intra-week videos. So maybe hit that notification bell. Is that what people do? And you can be notified if I do a video intra-week. So that is it. Have a great weekend. We'll see you back here throughout the week. Take care.